Good afternoon, everyone. Last session. Thanks for hanging in there, coming out to join us. Welcome to our session on shaping the next era of trade and payments. Interoperability, building a network that works for everyone. This panel will look at how banks, fintechs, and SWIFT can work together to protect transparency and consistency as alternative payment methods become mainstream. The discussion will focus on avoiding gaps between different systems so remitters and beneficiaries have clear and consistent experiences. Speakers will share practical ideas on how to keep standards aligned, meet compliance needs, and build a network that works for everyone. I'm Brian Hodgson with TerraPay. I'll be the moderator of today's conversation. I want to give a special thanks and shout out to Sophia Peterson from Barclays, who couldn't be with us here today, but she did much of the heavy lifting, preparing this presentation for us, and as well to BAFT and the Planning Committee for giving us the opportunity to be here. Briefly, TerraPay is a fintech that simplifies global money movement, providing a single connection to one of the most expansive cross-border payment networks. Regulated across multiple markets, our network enables payments to receiving and sending countries worldwide, reaching a vast network of mobile wallets, bank accounts, and cards. And perhaps, if not the most important, close to it, what I'll say next, we're integrated with SWIFT, which means it's not a heavy IT project for banks. And I'm joined by leaders here who sit at the center of this ecosystem, shaping standards, serving global financial institutions, and enabling new forms of interoperability. And I'll ask them to please introduce themselves.
Sure. Hi, everyone. I'm Meghana Totapalli, Product Manager for Network Interoperability Initiatives at SWIFT. Previously, I served as Product Owner for SWIFT GPR.
Hi, everybody. Chris Birch. I work at Standard Chartered. I've been there for about 15 years. I am responsible for our financial institution sales business across the Americas. Maybe just to get the crowd going a little bit, I'm going to fully own the fact that that is an AI-generated photo of me on this picture. And it's a very short but very funny story. I needed to send in my picture to BAFT. I was sitting at my desk. I was wearing a green hoodie. I was not showered. I took a picture, and this is the third draft. The first draft, I sent it to my wife, and right away she responded. She's like, "You do not look that good." The second draft, I went back to Gemini, and I'm like, "Okay, make me a little bit uglier." It came back, and I looked like the Crypt Keeper. I was like, "Okay, not old, just less ugly and perhaps less shiny." This one, I think I should have still gone with one more prompt and said less shiny. I showed it to a colleague and he said, "Looks like you just came back from the spa." But there are lots of tools for Gemini and AI outside of payments too.
Cool. Well, thanks, Chris and Meghana. I'm pleased to be part of this conversation with you. And I thought it would be good to share a related and relevant information that just came out of the recent BAFT conference in Dubai. And essentially, it's a roadmap summary emphasizing co-creation and innovation advancement resulting from partnerships with shared goals and visions. At the January 2026 BAFT MENA Forum in Dubai, Ani San, who's a co-founder and chief business officer of TerraPay, was joined by leaders from Citi, StoneX Group, and Standard Chartered to shift the focus on re-architecting the ecosystem through co-creation. And to quote Ani, he said, "At TerraPay, we never set out to replace banks or rails like SWIFT. We set out to enhance and extend them. We're connected to almost 200 wallets, with 95 of them being direct with instant payout capabilities, to over 3.7 billion mobile wallets. We're also connected to almost 14,000 banks and 7.5 billion bank accounts. And all of the card accounts." So the 4 points that came up on the roadmap for bank-fintech collaboration as discussed at the BAFT forum are: 1, Participation over control. Future-ready banks are those viewing wallets as massive distribution engines, not competitors. Co-creation as innovation. TerraPay doesn't just provide products, we design corridors and settlement models with partners to solve real-world market constraints. 3, the notion of connective tissue. Banks are the custodians of trust, and wallets are the distributors of access. And 4th, making SWIFT wallet native. TerraPay serves as the translation layer, bringing the gold standard robustness of SWIFT to digital-first endpoints with enhanced speed. So the key takeaway being the future of payments will be built by ecosystems moving together in partnership and collaboration. And so today's conversation, again, is about avoiding gaps between systems so senders and beneficiaries have a clear, predictable experience, regardless of whether value is moving to a bank account, a card account, or a wallet. And at TerraPay, we spend a lot of time thinking about connectivity, how banks, wallets, and card networks interoperate through existing infrastructure, aligned standards, and full regulatory compliance. Our recent collaborations with SWIFT and MasterCard in the establishment of a Zend network are practical examples of that philosophy in action. But today isn't about any single company. It's about what it takes to build a network that works for everyone. Banks, fintechs, merchants, and most importantly, end users. So let's get into some questions for the panelists. The first question I have will be for Chris. Chris, as alternative payment methods like wallets and real-time rails become mainstream, how do we expand choice and speed without creating fragmentation, inconsistencies, or new compliance risks?
So I view the role of a bank to really be that interoperability layer. Like you've got the SWIFT network, which verifies the user, they verifies the person we're talking to on the other side. It's an authenticated message that's coming through. We have, in many markets, we can deliver last mile, but where we can't, we partner with other wallet providers, fintechs. We just signed a deal at Cybos with Dandelion. I always forget if it's Dandelion or Daffodil. It's definitely Dandelion. It's a yellow flower, I know that. Where they can do real-time payments into 22 different markets. We send them out as like our scout, our agent to go in and do that last mile delivery. And I think all of this comes together at a time with ISO, which is really powerful because you've got that standardization across the board that allows for robust transfer of the payload from a payment that originates here, but can give us all the right information as it goes down into the end market. I think the risk of fragmentation is you get these digital islands where if you create something that's not robust enough, that can't absorb all that, or something that's so bespoke that you have to design an architecture that fits into only that tool, you're going to lose sight of certain transactions. And I think that the important part, honestly, like the fraud, the AI intelligence, the deepfakes that are out there, they really scare me. And I think that if we're not able to see across our entire organization how a client interacts with us across all products, across all systems, across all partners that we might use to deliver, we're going to get in a spot that's not going to be very comfortable.
Interesting perspective. Thank you, Chris. It occurs to me that the innovation scales when it extends existing standards rather than bypassing them, and that interoperability should feel invisible to the end user, but fully overseen by banks, to your point. And that's how you get the speed without fragmentation. The next question we have is for Meghana. Meghana, why did SWIFT decide to focus on interoperability and how the new players interact with the network?
So interoperability is not a new topic for SWIFT. It has always been a topic of focus for us. It's in fact the reason why we exist, to make financial markets interoperate with each other, with the community of our banks, our partner ecosystems, market infrastructures, right? But of course, there has been increased focus on it recently for the reasons that Chris has mentioned, because due to end customer behavior, their need for speed, transparency, and access for different kinds of payments, we created a lot of digital islands, if you will, that don't speak with each other. So there's a lot of fragmentation. Now, fragmentation doesn't just mean that these islands are not talking to each other. It also means that there is friction that's building up with the end customer experience. So the experience, it's not even across all the systems. So thinking from that perspective, I'm sure you must have heard about this article from World Economic Forum about the cost of fragmentation, right? It's going to be very expensive, as expensive as 7% of the world's GDP by 2030. So it's essential that we address that fragmentation. It's no longer just the ease of access, but we have to make this new evolving ecosystem sustainable. To do that, we started collaborating more with PSPs, fintechs, of course, with our banks. Basically, taking on the role as an orchestrator, creating that network of agnostic unifying layer so that we create the bridges between all these islands so all of us can communicate and talk in the common language, which is the ISO 20022. So the idea is to take ISO 20022 as our solid foundation and build blocks on top of it and reuse existing trusted Swift infrastructure to be able to interoperate within these ecosystems. We're also encouraging the community to leverage existing Swift resources, be it Swift GPI pre-validation services or SwiftRef API, and we've been working to enhance them much more to help with interoperability. For instance, we've opened up GPI tracker to allow credit confirmations from PSPs and wallets that are off Swift network. Previously, when they're off Swift network, you wouldn't have visibility on the confirmations. So we are doing all those along with some sandboxing, trials, and experimentations, basically to build a tool kit that allows all the players to communicate with each other and interoperate with each other.
Great, very insightful. And I know from TerraPay's perspective that we feed into the GPI tracker so that tracking and availability of information is all part of the process.
Yes, absolutely. The integration that we are doing with fintechs and wallet providers, like I said, it's not just about access, it's about inclusion as well. To allude to some of the points that were made in the prior panel, some of the demographics, right, Asia, Africa, they rely on wallets and mobile payments a lot. Because all of us are in banking sector, it's common for us, natural for us to think about use cases in banking, but 60% or more of the world is unbanked. So we need to tap into that demographic and see how we can include them as well into the payment ecosystem. That's where the wallet integrations, of course, integration with TerraPay and Swift, and integrations that we have done with Standard Chartered Bank to be the banking partner with some of these wallet providers is helping.
And then an interesting topic is probably folks here have heard, I've read about pieces that are mentioning a new Swift retail scheme. Mm-hmm. Can you share a little bit about that?
Sure. So it was announced at Cybers, the idea is to have a framework with a set of rules defining the speed, transparency, and traceability metrics for all the players. It's not a new technical investment, it's a framework. Idea is to have all the players follow the same rules. Like I said, reuse your existing Swift infrastructure and try to leverage those. And we have just started a coalition with some of the key players in the industry. And we are going to do it in a phased approach, focusing on some select corridors to make sure we are getting value out of it.
Great. And it's what I hear loud and clear there is each partner and part of the ecosystem has certain strengths and play to those strengths. And so such Banks bring their governance and risk management and customer trust. Networks like SWIFT bring global standards and reach. And then fintechs bring speed, connectivity, and innovation. Next up, looks like Meghana, you have a question for Chris.
Yeah, so I want to hear from bank's perspective. What's your take on your integration with fintech and the PSPs? And what are the benefits and challenges you're seeing when you use the standardized framework to talk to the fintechs?
Sure. So working with fintechs has been exciting, interesting, frustrating. What I often say is, and I say this with like the utmost respect to them, they're breaking our system in some very cool ways. There's a couple of examples that I can think of. One, I was talking to a fintech in California who came to us and wanted to do virtual accounts. I said, yeah, we've got that. And I said, we've started going through the use cases. Did they need it for collections, for reconciliation? Did they want to have a virtual ledger? Did they want to have it for payments as well? And then we got to the question about how many they wanted. And they wanted 100,000 virtual accounts new each month. At the time, the market that they wanted to do this in, our virtual account number structure was 5 digits long. They would burn through that in a month. So we had to quickly re-architect our system in order to make sure that we can accommodate that kind of growth and that kind of volume, as well as it prompted a whole bunch of KYC questions like how are you possibly onboarding 100,000 customers a month and still being comfortable with what you're sending to us. So it was a really interesting problem to have to tackle and solve, and it also required, fortunately, our virtual account infrastructure was agile enough such that we were able to change it without too much. We didn't have to tear it all down and rebuild it again. At the end of the day, we've got a much more robust system. We've got a system that's capable of handling hundreds of thousands of virtual accounts in terms of growth per month. There was another fintech that came to us in Thailand, and there was a kickboxing fight that was happening, and it was a pay-per-view opportunity. And what we didn't realize is half of Thailand pays to watch this kickboxing fight. And we have prompt pay connectivity in Thailand, which is the real-time payment scheme. And this fintech asked us to increase our transactions per second from 150 to 1,500. I'm going to say that again. Transactions per second from 150 to 1,500. First of all, unfortunately, they asked us this on the Thursday before the fight on Sunday, and this was a hardware fix. This is not like a switch. This isn't a dial that we can turn up. But we are now investing into our system to consider like how can we deal with that kind of scope and magnitude of what's going on. The other part is APIs. Fintechs are very API forward, and it's been challenging. I think part of it is scoping out projects at the outset. Banks will often work in a very linear fashion. You have you sign a deal, it gets passed over to an implementation team. They scope out what the project looks like. They produce a business requirements document, and then they start developing coding, and then it goes into testing and production. What we've quickly realized is if we don't bring the engineers into, we have a digital sandbox called SE Access. If we don't give the engineers access to access, no pun intended. If we don't give them the access to all of our APIs at an early stage, the problem that we started seeing repeatedly is they would get into the sandbox having already created the business requirements doc, and they're like, wait, I want that whistle, that bell, and this feature as well. And for us, that's like a redesign. Some of these require additional approvals. Some of them, they always want to customize it. So again, we've had to learn to be a lot more scalable and flexible, as well as not as linear in our thinking as we go through this, which has had a really good feedback mechanism for our regular corporate clients, our regular FI clients. We're a lot more nimble as a result of this. From an interoperability point of view, it's also really emphasized the need for a robust set of modular APIs where we can pull in bits and pieces. We don't want to have to re-architect our core system or any of our large systems. We want to be able to wrap, whether it's like putting a universal adapter between one module and the next so that we can translate what the payment file looks like on this side to what it needs to look like on the other side. All the while keeping our second line very, very well engaged to make sure that we're not inadvertently truncating because the pipe for the last mile is smaller than the payload that we're getting at the first place. We always follow a golden rule. Not all banks do this, but I think StanChart does this fairly well, where we won't send a payment that's missing information. We want to treat the next bank in the chain or the next player in the chain, if it's a fintech, a bank, whoever it is, as we would want to be treated. We would want complete payment transparency, not only because it's regulatorily required, but because it's the right thing to do. And we don't want to truncate anything. So we keep the second line very well involved. We keep our risk advisors very well involved through all of this to make sure from the outset, at the point in time when we're starting to scope and spec a project, are we accounting for all of the pieces, and are we not making sure that we're not compromising anything from our technology, from our risk, or from the overall user experience that the fintech's trying to get?
Yes, that's so important, especially having that standard data requirements, not just for tracking purposes, but also for security checks, right? AML checks, sanction screening, or even to have fraud monitoring.
Absolutely.
Across the systems, right?
Yeah, and it's trying to convince, I think there's still a bit more work that the industry needs to do in order to convince the remitters to use all the extra data fields. Okay, great, we've got all the fields now.
Mm-hmm.
There's a lot we can do with this. Not only, I think a lot of it's around cost mitigation in terms of faster processing of transaction screening, doing more meaningful information with your transaction monitoring process, post-transaction clearing or settlement. The more data we can get in this, and a big part of it is convincing our clients, okay, it's maybe a pain in the butt to go and put it all in there, but you're going to get a much better user experience at the end of the day.
Absolutely.
Great example and really cool stuff. And it's, how fintechs can be frustrating, but bringing to the table.
Frustrating in the best possible ways. Like they're fun ways.
Bringing to the table, right, some of these use cases that you probably would have never thought of,
Yep,
right?
absolutely.
And in the end, everyone benefits. So really cool. Chris, you had a question for me.
Totally spaced.
No?
Remind me what it was.
I think that you wanted to ask me about, as a fintech, if I could share some examples of areas where the SWIFT interoperability will improve the network.
Absolutely, please.
Yeah.
Last mile
Great question.
Yes.
Great question.
It's all last mile friction, guys. It's expected.
And adding on to the examples that you shared, I see SMEs are a great example because they feel the friction immediately, right? SMEs care about liquidity, velocity, predictability. Faster settlement and usable funds matter in a big way more than the rails. Interoperable wallets and accounts help SMEs turn capital faster without leaving the banking system. For example, a small importer paying suppliers across borders doesn't care about the rails. Waiting days for settlement directly impacts working capital. And I'd like to draw a connection to SMEs and probably more small businesses. And the connection is to where I think is a big opportunity for banks. And that's with the P2P, so person-to-person cross-border remittance market that is largely done outside of the banking environment today through money transmitters. And if you think about the US, and US outbound is the biggest cross-border sender in the world, and the World Bank estimates that number at $80 to $90 billion a year. And these are people that have come from away, foreign-born individuals coming here to make a better life for themselves, their family, both resident family as well as their families back home. And they've come with a dream, a vision. They've opened up small businesses, so they're shop owners. They bank with you on a small business basis. And then as I've talked to banks, and I understand that they're doing their remittances somewhere else, right? So those transactions maybe, the funds exist in your bank account, but you'll see them in the form of an ACH funding a money transmitter. And what I'm super excited about with the Terabay rails and network and connectivity through SWIFT is the ability for then banks to keep that transaction in-house. There's no reason for that person to have to go out to their mobile wallet, mobile app to send the transaction through another provider. And connecting back to those small businesses is, I know banks, is what I've read about and talked to, is this I'll call it maybe encroachment, if you will, from some of the fintechs and plucking off a little bit of business here and there. But Chris, you talked about the holistic approach and looking at customers that way. And you think about you're serving them from a loan capacity as a small business operator, perhaps. But then they're doing their remittances somewhere else. And the reality today is that there are many now fintech small lenders, right, that can do that outside of the banking environment. So more than ever, I think it's important that holistic approach, how do we keep and retain all of that within the bank? And that's a big part of what we're enabling today through the relationship with SWIFT.
Are you guys able to do work with collections, like facilitate SMEs with collections who might be receiving from wallets as much as going out to?
So we can on a small basis today coming into the US, and that's one of our big focuses too, is growing that capability coming back into the US.
Okay. With a lot of integration, or it's pretty straightforward because it's already SWIFT?
That's right.
Okay.
So that's the beauty of it, right? Is no one wants a big IT project, we get it, and I think that's what makes it so much easier in the conversations we're having with banks. So with that said, I think about the other things that TerraPay has done, and it ties into what Meghana shared, and that is, and Chris too, right, is doing the work up front, and instead of just sending data out that's going to end up in I think you call it a request for something.
RFI, request for information.
Right.
Yeah.
Where the data didn't match. And so it's a lot more time consuming for the bank administratively, and importantly, a bad experience for the customer, right? And so, TerraPay recently launched a service called TerraPay Verify that does that front end matching of the beneficiary to the account information to make sure they really do match. And TerraPay, again, their connection to so many banks around the world, the wallets around the world, pulls that data and looks, are these a match before it goes out? So significantly reducing errors, mismatches, reducing the costs of, and importantly, improving the customer experience.
I think the beauty of that is there used to be the argument about, okay, do you build, partner, compete? Like, how are you going to go about looking at that? And I think that it's more about the different rails. I view it as like different lanes on a highway. And you have there might be a collector's lane. I'm from Toronto. We had the collector's lane on the 401, and then there was the express lane. And so they serve different purposes. They get you to where you need to go, but they come at a different cost, at a different speed. You've got we had these ETR 407 was like a toll highway that you had to go through. And they all work simultaneously. And I think that for us, within this industry, when people start to, rather than trying to solve everything, I think the direction of the industry is much more towards partnership and leveraging each of the strengths of the partners that are in the ecosystem. And if we can stay in our own lanes in the right way, let leverage the extensive work that you guys have done at TerraPay to go and build into wallets, leverage the authentication, the trust, the interoperability that SWIFT facilitates across that, leverage the lending structure, the capital controls, the risk mitigants that banks have. We create a phenomenal ecosystem that's much more stable, much stronger for the long haul.
100% agree. That's our goal, is to provide more options, more functionality, allow the banks to offer more services and options to their end user, an improved experience. So, thanks.
Yeah. And I think all three of them are complementary to each other. Each one of them wouldn't survive out there.
Yeah.
Question posed for both of you, and you can fight over who wants to go first. What does effective collaboration, we've touched on this throughout the conversation, what does effective collaboration between banks, SWIFT, fintechs, and global networks look like in practice when it comes to maintaining standards, transparency, and regulatory confidence at scale?
So like we have been discussing, right? If we look at domestic payments, I'd say they don't have as many problems as cross-border payments to begin with. And with the cross-border payments, if you look at the data, at least at Swift, 75% of the payments reach the beneficiary or the destination in less than 10 minutes. But the end customers and SMEs don't have the same experience. They see friction, they see delayed payments. When we look at it, 80% of the time of average transaction is spent in the last mile. That's where more collaboration is needed between Swift, banks, fintech, PSPs, domestic players. That's the friction point and the pain point we need to address as an industry, right? That's where more collaboration is needed. I can't iterate this enough. ISO 20022, collaborating on that, it was an excellent example what we can do as an industry when we put harmonized efforts towards the common goal. Now that we have it, we should use the rich data, not like-to-like mapping, really use the rich data elements and use the common rule book, come up with common market practices. Swift is trying to define that. Collaboration with all the players in defining and adapting those market practices. Of course, having even regulation. I know fintechs and banks and PSPs have different licensing structures. They're fundamentally different entities. But it's also important to have some level of consistency in regulations as well. Especially in terms of cross-border eligibility or the KYC requirements that will help us with the whole risk and compliance and regulatory requirements.
No, absolutely, and I think that on our side, I think on every side is making sure. I think the differing regulatory requirements is a big one, and depending on, like in the U.S., it's now pretty standardized, and I think that there is a wide appreciation that fintechs, at the end of the day, one, are going over bank rails on almost every instance. There's a couple that have direct access to payment ecosystems, but most of the time they're going over bank rails, so we have to be able to digest them. Two, the regulatory landscape in most developed markets is really equalizing between the two, and so the expectation, not only do you have to get it through a bank rail, which means that you have to meet the bank standard, but the regulations expected of the fintech is as good or as stringent as the bank is. It's not the case in every market. I was in Mexico City last week, and there is a huge disparity between what fintechs are able to do, which is a lot more than what the banks can do. Like, banks are not allowed to touch crypto. Standard Chartered does a lot in the crypto space. We do a lot in stable coins, but banks in Mexico are not allowed to touch crypto. Whereas fintechs, Bitso does 10% of the remittances going in and out of Mexico today over their rails, leveraging a fiat stablecoin sandwich. So that's a disparity that needs to be fixed. And I think that that's really going to have to, there needs to be more collaboration on that. I think getting fintechs to appreciate that gives them long-term survivalhood and embrace that regulation is helpful and will make them more stable in the long term, I think is the first step. We spend a lot of time educating our fintechs to go through that process. There is an obvious resistance. There are a couple of very, very large fintechs we work with that have spent an enormous amount of money not becoming a bank because they realize that that's going to be too cost prohibitive for them. It's going to be too difficult. It's not to say that they want to skirt regulations or the rules, but it would put them at a disadvantage and would substantially erode their profitability. Brian, what about you?
We got a couple minutes left and some points here, and connects nicely to what you said, Chris, with your lanes type things. And a note I had made was, right, in practice, collaboration works best when everyone stays in their lane, but connects those lanes seamlessly. And that banks don't need new infrastructure. They just need that extended reach. And when new payment types plug into existing messaging, compliance, and settlement models, adoption becomes straightforward. And I guess just closing, we got the countdown on, 1 minute left.
We have one question from the audience up here too.
You see, I can't even see anything.
Is it cost efficient for correspondent banks to process low value payments less than $100, or do you prefer to avoid those payments? It's not cost efficient, but I don't prefer to avoid them because for me, I think financial inclusion. I come from a small town. There's 3 times as many people in my apartment building in Manhattan than the town I grew up in. So it's like, and I half the kids in my school, they didn't have bank accounts. Like, it was a tough place. Financial inclusion, personally for me, is very big. I think those are incredibly valuable, and making sure that that part of the population is properly integrated is huge. Unfortunately though, it's very tough to make. We can't take deductions. The charges are going to be proportionally lower. We always try to work with our customers, if we're working with a respondent bank, to make sure that we'll process those. Oftentimes we'll process them for free. But we are looking for their commercial payments that will allow us to make a little bit of money off of those.
So that holistic approach, and I'll say, for those of you that want to have a further conversation about that question, I think maybe the TerraPay model and some of the economics and how it all works will be of interest and shed some light on that. So we have a separate conversation on that. And we're out of time, so I'll just wrap it up and say closing summary. We've covered a lot today, but the takeaway is quite clear. The future of cross-border payments isn't about choosing between banks, fintechs, or networks. It's about connecting them in ways that preserve trust, transparency, and consistency as new payment methods scale. And interoperability works best when it builds on existing standards, not around them. And when that happens, innovation accelerates without increasing risk. And if we get this right together, we don't just move money faster, we build a global payments ecosystem that works better for everyone. So thank you to the panelists and BAFT, and thank you all being here for this important conversation.